In today's video, I'll be providing you with a relatively quick update on the crypto market, how things are looking, and most importantly, should you be buying the dip? As always, if you enjoy the content, make sure to smash that like button and subscribe. Let's jump right into the video. First of all, Bitcoin did indeed fill that CME gap. We came all the way down to below 77.3K, which filled that entire gap. Very positive because we've been waiting for this for a while. Now, the question that you might ask is, can we go lower? And my answer to that is probably yes. So the only level that I'm really focusing on right now is the 200-day moving average. As we can see, this blue line, we've been talking about it in basically all of my recent videos. If this starts holding as resistance, as we saw with this first initial wick yesterday, Bitcoin will likely resort lower. Now, the next levels that I'm actually looking at here would be all the way down to the 73K area, where we can see this is initially where we broke out. You should be keeping your eyes on this level. Now, you might ask also, can we not just pump from here? Would this not confirm the bottom? I'm not so sure, and I wouldn't be super aggressive in trading, especially if you're longing Bitcoin right now, because we don't want to be catching falling knives. For me to turn fully bullish, I do want to see some continuation to the upside and holding key support levels. For example, this orange box over here would be a great start, and then we would have to find ourselves back into the original range, which is right around 91.8K. If we can hold this level all the way up here as support, that would be a great start for me to turn fully bullish, and perhaps we can start retargeting the highs. But until then, I'm still bearish on Bitcoin, and I will keep that stance. I really don't want to lead you guys astray, and ultimately, everything that I share with you in all of my videos is exactly how I've been operating in the market. So if you like my input, make sure to smash that like button and subscribe, and don't forget to turn on that notification bell. Now, looking at a longer term chart for Bitcoin, what I want to show you as well, outside of this 73K area that we've also highlighted, is the fact that we could actually retest as low as 69K. Now, this is the first time that I've actually talked about a target below 70K, but the reason being is because this is targeting the previous high from the last bull market, and it's not unrealistic for Bitcoin to do this because we've seen it happen before. Keep in mind as well that from the current high all the way from 109K to where we wicked, it's only been a 30% drop. Now, I don't just want to throw around the word only because it's still a significant drop, mainly for altcoins because they have been struggling even more. But this is perfectly within the realms of possibilities in a bull market and for the bull market to still be fully intact. Now, if we were to break all the way down here, it would start posing some more questions as to, is the cycle actually over? I firmly believe that the cycle is not over until we're told otherwise. All we can do is look at the charts and analyze what's given to us. Now, if we are to break below the 69K level, which is the previous high from the last bull market, at that point, I think we would have to be considering a left translated cycle. But you can see, although what happened with COVID-19 was a black swan event, the market dumped 55% before actually pumping even higher and setting a new high and then going into the bear market. I still think that if all things play out as they normally should, the bear market should be in 2026. And if my stance changes, I will make sure to keep you updated. But in the short term, I just wouldn't be catching falling knives. Wait till we get some confirmations a little bit higher. The first one being holding this 200-day moving average as support, and then holding the orange box up here, and then holding the bull market support band as support. It's in the name, the bull market support band. This is the level that you really want to be holding if we are to see continuation for Bitcoin. As always, if you're into crypto trading and you want to trade this price action, make sure to click the first link in my description down below. It brings you directly to Weeks, where you can see you can get a 50% deposit bonus. That means that if you deposit just $2,000 to your account, you get $1,000 back for trading purposes. This promotion won't be around for long, so make sure you sign up. It's the first link in my description down below. All you need is an email and a password to sign up. Now, it's been a while since we talked about our good friend Bitcoin dominance. We are just pumping higher. You'll remember just a couple weeks ago when we printed this wick on the weekly chart, everyone turned super bullish for altcoins, saying that finally we were going to get altcoin season. I wasn't so convinced, and now we're starting to see it play out exactly as we discussed, potentially going ahead and filling this wick. I think that this is a highly likely scenario, especially if monetary policy doesn't change. Bitcoin dominance will likely continue to increase. Now, where can we go? How high can we actually go? As we can see, the previous wick up here before we broke down brought us all the way to around 65%. So it wouldn't surprise me if we made it all the way to 65%, which is above the current wick. I was initially only talking about filling that wick, but let's see if we can actually make it above there. Obviously, this isn't good for altcoins because naturally, whether Bitcoin goes up or down, Bitcoin dominance has continued to increase. And two charts outside of crypto that I just wanted to show you. We have the S&P 500. We broke below the 200-day moving average, and it is a pretty rare occurrence for this to happen. As we can see, I'm now on the weekly chart. The last time we broke below here was in October 2023, and then we saw a nice reversal to the upside. But if we get that confirmation break, for example, here in February 2022, we pop back up and the 200-day moving average starts acting as resistance for the S&P 500, we could see further drawdown. Now here from the top, this ended up essentially being a 27% correction, which is huge for the stock market. Now, what would that look like? From the top, we take it from here and we go down 27%. Yeah, that would be completely detrimental for the stock market. Of course, I'm not saying that this has to happen, but it should be something on your radar because also the NASDAQ on this weekly candle thus far is below the 200-day moving average as well. This doesn't happen often in the stock market. As we can see, the last time that the NASDAQ was actually below its 200-day moving average, we saw that it dropped quite significantly again, and it actually held the 200-day moving average as support for quite a while, all the way back into March 2023. So be cautious here when it comes to trading, especially if you're feeling bullish and you want to catch these falling knives. Now, me personally, as you've come to realize, I've been shorting the market for the past few months on weeks. And again, if you want to trade with me on weeks, you can sign up. It's the first link in my description down below. All you need is an email and a password to be able to trade this market. But we'll have to see some confirmation for Bitcoin and the stock market before I even consider entering any longs with this current price action. And that's basically a quick update. The only last two things I wanted to show you was the volume for these spot ETFs. As we can see, Bitcoin once again seeing $278 million of outflows, and BlackRock is also contributing to this. Usually, if we're bullish, BlackRock are the ones that usually don't sell their Bitcoin. So that's also something that you should be considering. And for Ethereum, again, some more outflows as well. If we take a look at the price action of ETH, you can see that actually yesterday we dropped below 1800 all the way down to almost 1750, which is insane to see for Ethereum, especially with everyone having such high expectations for this bull market. Again, I think that the trend will shift when monetary policy shifts. And as I've been talking about in my previous videos, when Ethereum starts going near the $1,700 level, I will start dollar cost averaging into it as we head lower. And that sums up today's video. Just a quick market update for you today, but don't catch falling knives. I know a lot of us, especially within the crypto space, are obsessed with catching the bottom, but please wait for at least some kind of confirmation. Right now, I'd be using the 200-day moving average, and then for more confirmation, it would be to re-enter the range around 91.8K. Everyone has their own metrics that they're looking at, but just make sure that you're at least looking at something. Don't just blindly go long now, because Bitcoin could resort to the downside once more. If you enjoy the content, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.